The world has been rattled by an epoch-making crisis, which has caused significant harm, shuttered businesses, put livelihoods at risk, and protectionist reactions have cast doubts about the future of globalization. As we start rebuilding, we need to seize this opportunity to build a better tomorrow, one which achieves a more balanced, fair, and ultimately a more sustainable world. Globalization has helped raise living standards around the world in recent decades, and will continue to be vital for the future. Finance will continue to play a central role in international business. Making sure capital is available when needed will be crucial in shaping the global post-COVID economic recovery. Investors will provide the funds required to help companies around the world stimulate growth and create jobs. They will also help bring about the transition of our economies to a more sustainable future. Luxembourg will play its part. Our unique expertise in international finance connects investors with projects. Our ecosystem, our toolbox of investment vehicles, and our stability offer an ideal platform for financial services to operate on a worldwide scale. Luxembourg contributes to building a better, stronger, more open, and more sustainable tomorrow.
Welcome to Focus On, bringing together financial industry experts of different horizons, sharing and discussing their insights.
Welcome to all of you in Europe and around the world. We are very happy that you're joining our live stream, directly brought to you from Luxembourg. This episode about wealth management is taking place at a time of major economic uncertainty. As the war in Ukraine goes on, oil and commodity prices are blazing to multi-year highs, and economists have started dusting off their old playbooks on inflation. But when we look back at the past 10 to 15 years or even longer, this is certainly not the first challenge the world is facing. The financial crisis of 2008, COVID-19, climate change, all these events have had an impact and have transformed the way we live. Now, another effect of the global financial crisis of 2008, and perhaps a less well-known one, is the contribution it played in the way that high net worth individuals invest. When we look at the 10 years between 2010 and 2020, the number of high net worth individuals globally almost doubled to 20 million, and their wealth also increased by 85% to almost 80 trillion. Looking at the family offices operating globally, 30% of them were created between 2000 and 2010, but another 40% were created between 2010 and 2020. And all of this has been happening in a context of one of the biggest transfers of intergenerational wealth. Now, private bankers and wealth managers know very well that during those last 2 decades, their clients have also become global citizens with activities, assets, family members all over the world. And this also means that their wealth has to be managed across jurisdictions by experts that can also handle that level of complexity. But beyond the idea of complexity, the ideas of stability and peace of mind are probably the ones that matter most. And also the differences between the younger generation of high net worth individuals and the older generation are perhaps not that big. Both young and old care today about the way that their investments are being done. And both young and old also truly enjoy the functionalities of a highly integrated digital app that can show a real-time view on their portfolios. And also both young and old want to be offered solutions out of a stable jurisdiction by highly qualified professionals. And that's exactly what we will focus on in the next 90 minutes. We will bring together experts from across the wealth management industry. They will explain to you how they work together and how they offer cross-border solutions. And they will also tell you how Luxembourg comes in as a leading EU onshore hub for wealth management. I really hope that you will enjoy listening to their insights. I will see you again later. Jerry, the floor is yours. Thank you.
Thank you, Lynn. Our first topic today aims at the very heart of the Luxembourg private banking sector, cross-border private banking, all-weather value propositions. My name is Jerry Grbic. I'm the CEO of the Luxembourg Bankers Association. And before joining the ABBL, I was myself a banker for 26 years. Today's panelists are all seasoned professionals, starting with Olga Bogdanova. She's a senior investment counselor and director, head of investment counseling, North and Central Europe at CITI Private Bank. Olga has 15 years of experience in advising ultra-high net worth families. She worked for CITI in Geneva, London, and Luxembourg. Our second panelist is Luca Derlin, head of international private banking at Deutsche Bank. He started his career in Italy before joining Deutsche Bank in London. He then held several positions in the group in London, Hong Kong, and New York before coming to Luxembourg in 2021. And last but not least, Falk Fischer rounds off our panel. Falk is CEO of Bank Julius Baer Europe since 2016. He has over 30 years of experience in international private banking. And before joining Julius Baer, he held several positions at Commerzbank in London and Luxembourg. Now, before we start, let me share some information about the Luxembourg private banking sector. It represents over 500 billion euros in assets under management, generating revenues of over 2.2 billion per year. We have a total of 54 private banks in Luxembourg that serve in and from Luxembourg their international clients. One interesting fact is that the proportion of ultra-high net worth individuals represents almost 2/3 of AUMs in Luxembourg. So I guess it's sure to say that Luxembourg has become an international center of excellence for international wealthy customers. So, and this brings me to the first question, Falk, if you don't mind. What makes Luxembourg so competitive and interesting for international customers?
So thank you very much, Jerry, for the introduction and the interesting panel and question. Actually, the question on the competitiveness of a financial center is, in my view, to be answered, first of all, from the business model perspective. Here in Luxembourg, most of the market participants look for cross-border and international business. Usually, in my view, the opposite to their home markets and to their domestic activities. Usually, all the market participants have somewhere a home market, but the business here is cross-border and international. Going cross-border for international clients requires access to an international ecosystem. What does that mean? Access to specialists in various areas, business, legal, tax, to only name a few. The connectivity in the ecosystem between the business and the other stakeholders is given here in Luxembourg. Well, the country is small. However, the financial marketplace is very large, but connected. People are connected to each other. The access is easy, the ways are short. However, connectivity is not only a matter of organization, but as well of mutual understanding. To be successful, all members of the market and of the ecosystem need to understand the challenges of the cross-border business and the international requirements, regulatory and others. So it is about knowledge along the entire value chain and process chain. And this is, in my view, the competitive advantage of Luxembourg in the international business in comparison to domestic markets.
Thank you, Falk, for this insight. Olga, I think you have some thoughts to share about this.
I do, thank you. I completely agree. So CITI Private Bank in Luxembourg is quite new here. While CITI has been in Luxembourg for 50 years, the private bank is only roughly 2.5 years old in the Grand Duchy, and we already have 50 members of the team roughly, and of them they speak 23 different languages. They're incredibly outward looking, and a lot of these people we've hired locally, and that just goes to show how incredibly international and outward looking Luxembourg is, and it's all about that ecosystem. It's all about serving international clients in a very professional and expert way, which is really honed in on here in Luxembourg. I completely agree.
Okay, thank you, Olga. Luca, I think you have some thoughts about this as well.
Well, I could only echo what Falk and Olga said, but just to build on that right clearly, the ecosystem is there. There is a favorable and supportive regulatory and legislative framework that everybody can rely. Banks decided to move here, right, the central competence for the serving of the client on an international basis. And this could only happen if only, and also the clients decided that Luxembourg is the right place to be. And we see that many of our clients decided to move or at least partially locate some of their activities here in the form of holding companies, in the form of family offices, in the form of private investment companies. So there is a real wealth and depth of international clients who decided to make Luxembourg their home. And that is why, let's say, this trilogy between the right environment, the banks, and the clients made it so that Luxembourg is a perfect environment for wealth management.
Mm-hmm. Thank you for sharing your views of the Luxembourg ecosystem, which seems to offer a large range of solutions to international wealthy clients. And you said it's not only the banks, it's the regulator, it's the short ways between all those players of the market. And we have, additionally to the banks, we have lawyers professionalized in those fields. So I think we really can talk about an ecosystem here in Luxembourg that offers a really good solution package for customers. Now, let's dig a little bit deeper on your daily work. Olga, what do you do in Luxembourg here with your customers as Citibank, and what type of clients do you exactly serve out of Luxembourg?
Thank you. So CITI Private Bank serves ultra-high net worth clients. So these are incredibly wealthy families, entrepreneurs who've had new liquidity events recently, and also well-established endowments and family offices, and even some privately held corporate treasury. So for CITI, Luxembourg is the booking center. This is where our assets are held for clients. It's also where our trading desks are for clients who actively use our capital markets proposition. And it's also where all of our support system for clients is. Client service personnel who do the admin and the payments. It's the traders who do the trades. And it's coverage. So it's the relationship managers and investment counselors such as myself who all sit in Luxembourg and try to cater to clients' needs. Now, what are those needs? They're incredibly different. I think there's an old cliche that says there are as many private client needs as there are indeed private clients themselves. But there are broadly three categories that we cater to. It is the very active capital markets traders who know what they're doing. They have their own professional traders, and CITI provides the infrastructure and the custodial relationship for that, as well as some of the admin and reporting. We have clients who don't want to manage their money themselves. They want to give it to CITI or to any other provider, which there are plenty of here in the ecosystem, to manage for them. So discretionary portfolios as well as those with private equity and real estate interests, which we also cater to. And then there's, of course, everything in between, people who want to have, or entrepreneurs who want to have that beginning a discussion about wealth management when they've just had a liquidity event and they just want someone to hold their hand and explain to them what these two different types of management might mean, how they can combine them, and how they can serve their families. As an investment counselor, my job is to deliver that whole package to clients and to understand what they need in order to plug them into the right part of the city infrastructure.
Okay, thank you, Olga. I understand that you have a lot of substance as Citi Private Bank here in Luxembourg to serve all those customers. Luca, if I may ask you at Deutsche Bank, how is the situation in Luxembourg for your company?
Sure. Luxembourg for Deutsche Bank is the international hub for our European operations. So what it means is that we cover all of our client base out of our business center here. It is true that there are also other markets in which, for example, we have a local presence, right? But that said, we have a setup which cater to be able to serve clients in all of the different jurisdictions, even if and where we may have a local booking center. What is the reason for that? First of all, doing business in wealth management is costly, right? And having the luxury of multiple booking centers out of which you can do everything, right, is really not sustainable. So we made a conscious decision already several decades ago that Luxembourg was the place to be, out of which we would want to manage all of our wealth management client base. This means that we have a coverage model which is revolving around, let's say, two potential alternatives. There are some countries and markets that we cover with relationship managers who are located in Luxembourg, who will fly in and out and go and visit the clients. And there are a number of locations where we would have relationship manager and potential investment advisors located in the same jurisdictions where the clients are. Obviously, this is all in line with the different regulatory requirements and needs that the various instances require in that respect. But the good news is that we have a setup which allows for the needs of the clients in the different places. With regards to business, we do pretty much everything out of here because there will be special solutions, more sophisticated and complex one, that individual jurisdictions will not be able to deliver. So more sophisticated trading, more sophisticated structured type of financing, and activities of the kind will only be delivered through our specialists, which are based here in Luxembourg, as opposed to having to develop those capabilities in some specific jurisdiction. So in a way, it's where it is all brought together, and all the clients get the full package coming out of you.
Okay, I see you have the whole chain value represented here in Luxembourg. So I'm eager now to hear about what the pure private bank is doing in Luxembourg. Falk?
Thank you, Jerry. No, actually, Olga, Luca, I can only echo that what you just said. With a little slight difference. As a Swiss bank, Julius Baer's Swiss bank, it's obvious we do not have access to the European Union, to the single market. And that's why Julius Baer here in Luxembourg, the bank serves as the so-called Euro hub, the gateway to the European Union. Exactly for the reasons which were just mentioned by Olga and Luca. So yes, we are a pure play private bank, so this is the only business line serving ultra high net worth and high net worth individual clients, but international clients. So where are these clients coming from? They are not coming from domestic markets here locally, like Luxembourg. Not at all, actually. Our clients come from the major countries in the European Union. They come from the Scandinavian countries, from Iberia, Spain, Portugal, from Ireland, from Belgium, and from other countries, just to name a few. The reasons why they are coming to Luxembourg are multifold. First of all, Luca, this is exactly the approach we're taking as well, is Luxembourg is our booking center for the Euro Hub. And there is a difference between booking the assets and providing advice. The advice is being provided in a way where proximity is key in the branches, for instance, in the branches in Spain or in Ireland. Or client relationship managers are traveling to the countries and meeting the clients there, giving or providing international advice on high sophisticated private banking solutions. That does not mean that the local domestic offering of the local banks in those countries is not important for those clients. It is, but it's different. It's a completely different business, and we are focusing on the international needs. But when we look into it, maybe I share some view on when we look at it from a COVID perspective, the last 2 years, then people might have thought that the client contact time would go down. The contrary happened. Client time went up, driven by technology. And this is an item which I wanted to share as well from a Luxembourg perspective. I think it is important for Luxembourg, and we see it here in private banking, that the advice, the product solutions, and everything what can be offered is important to our clients, but as well a process of digitalization. It is about automizing, visualizing, and digitalizing processes which are repetitive, because as Luca said, private banking is a costly exercise. So we need to streamline that processes. And this is where Luxembourg as well is very good in bringing processes together to reduce the efforts on administrative tasks and to allow us as a private bank to focus on that, what adds value for the client. And this is the advice which at the very end, given good market circumstances, will end up in a good performance for our clients.
Thank you, Falk. I see there's some consensus about the quality and the services that come from Luxembourg. Now, to round up the discussion, we need to address the current complex situation in the world, rising inflation and potentially a risk of stagflation, the Russian invasion to Ukraine, the climate change, and you name it, Falk, also the pandemic. Luca, how do you think the ecosystem in Luxembourg is dealing with these external shocks? And moreover, what are the solutions international investors are looking for in this current context?
Thanks, Jerry. As you say, these are in a way unprecedented time, at least if we look at them in the, let's say, taking a 10-year spectrum in terms of time horizon, right? In a way, I think the world got to be spoiled over the past 10 years or so, because since the global financial crisis, pretty much anywhere you invested, you were pretty much sure to make a good return. With a few bumps along the road, right? When first wave of COVID came up, before then there was a correction in the Q4 of the prior year. But in the long-term run of the past 12 years, markets only knew one way, which was one way up. Now, all these, let's say, adverse conditions that you mentioned clearly create an environment which is much more adverse in terms of expectation. And some clients may not be used anymore to the kind of environment which, in a way, is the normal one, right? So it's, in a way, going back to the root of wealth management, because in my view, there's only one way of doing wealth management. And the philosophy is one around developing a long-term relationship with your client, understanding very well what their needs are, where they come from, what their objectives are, and based on that, develop a long-term plan which will help them achieve their needs. And so it's a hand-holding and walking together through the different phases of their life cycle so that they can meet their objectives. So this means defining a plan which will stay true. Of course, over time, the environment around you will change. Therefore, there will be tweaks which will need to be delivered against that plan so that it's still actual and valid to achieve the results which is meant to achieve. And this means that in days like this, for example, we see the resurgence of solutions which may have been parked or a bit forgotten, right, over the past 10 years. So I'm talking about capital-protected investment solutions rather than hedging and risk strategy for protection on the downside, rather than alternatives, long-short neutral strategy, so that, in a way, wherever the direction the market go, you will be in a decent position. And not to forget, of course, equity release rather than structured financing, because again, against conventional wisdom, people think if somebody is rich, they will not need any financing. Something could not be more true away from the truth, right? Because again, there are standards of living to be preserved, and therefore there are financing needs in order to ensure a certain type of liquidity be made available to those clients over time.
Thank you, Luca, for sharing these insights of your professional approach to the problems we're facing today. Falk, I believe that your approach is quite close to what Luca just explained.
Absolutely. So, Luca, thank you very much for that. And I will add to that without repeating. So first of all, when we look into the markets from a pure capital markets perspective, I personally think that we still trade in a secular bull market. This market started about 10 years ago, as you said, 2013, driven by two main industries, technology and healthcare. So these were, in my view, or medical progress, let's put it that way. In my view, none of these two drivers are disrupted by inflation. The real economy, and this is important to be looked at, not only the markets, but the real economy, has, in my view, 5 main problems from an inflation perspective. First of all, there is a high demand in the post-pandemic era. Everything what could not be delivered during the pandemic is now on the plate. Secondly, there is lower supply due to the supply chain disruptions. We can see it currently in China. There are higher food and energy prices, definitely because of the Ukraine war, the Russian invasion in Ukraine. There are higher energy prices due to the energy transition. So what we do is we are replacing cheap energy, which we're benefiting from for the last 20 years, with higher priced energy, environmental, at least at the moment. The prices may come down going forward. And we have kind of a slight reversal of the globalization. If you don't produce anymore where it is the cheapest, prices go up. So that's a little bit the framework. And this is what we discuss with the clients in terms of advice. The economy as such, however, does not show any worrying imbalances like the economy was showing in 2000 or in 2008. And that's why, let me state it, it's not the beginning of a market crash. The bull market continues, but what we should acknowledge is no one was telling that a bull market always needs to go up. And we are, as Luca said, we are, in my view, in a new normal, which used to be the normal about 10, 20 years ago when we provided advice to clients in volatile times, particularly when interest rates still exist. That's why I'm quite confident we need to survive 2022. Let's not be glued to some screens with some curves. And I would rather say, take a step back and relax. Luxembourg is very good in managing crises.
So it's May, sell in May, go away. Look, I have to agree and slightly disagree with my colleagues because of course, nothing that's been said is controversial to me from a fundamental perspective or an economics perspective. But we have a huge amount of wealth generation and cash generation from corporate exits of relatively young people who are new to having a lot of liquidity, and particularly in Europe. You mentioned the Nordics, you mentioned Ireland. We have a lot of wealth generation through technology companies and digital companies, and it's incredibly exciting. And these companies all drive so much value, secular value, for where we're all going globally in the next 20, 30 years. But now these entrepreneurs, there's young entrepreneurs, have all this cash, and we're all telling them that inflation's going to eat it up, right? And inflation's not what they're broadcasting. It's not the interest rate. It is, you know, big numbers, big scary numbers like 7%. So it's very important for private bankers and particularly investment advisors to get in the heads of these entrepreneurs and understand that this is something that they've worked for a long time. And I think that sometimes we make it too complicated, we are too bullish, and we overlook some of the really, really simple solutions, which is about, you know, some bond markets have had a 10% correction, right? So we're saying as Citi Private Bank, bonds are back, and there are some investment grade, very basic solutions that you can now invest into. Floating rate bonds, very, very basic things that are now making sense and that are incredibly easy to explain. And I think that we have, as an industry, have become so sophisticated. We have all these asset classes, we have all these correlation analyses, all of these portfolio analytics. And I think we sometimes forget to take a step back and say, these newly minted entrepreneurs and wealthy people, they've just made their money and they really just need a simple solution and maybe a long-term plan, as you both said, and a long-term diversified portfolio. But I think that education and an understanding of what it is that they need today, given the inflationary fears, given that they maybe don't really care about what we're talking about here today, how do you solve for that is very important to me right now. And it's very important, I think, for the private banking industry to maybe take a step back and become a little bit more conversant in layman's terms with our clients, what the world for them, what the financial world brings them today. So it's not that I don't agree, it's just that I think there are sometimes simple solutions to very complicated problems that the world faces today.
Okay. Thank you, Olga, for this valuable input. I think we had a competent insight of the Luxembourg private banking market. On top of that, we got some a course of economics, and you fairly well explained the different types of customers Luxembourg as a private sector can serve. And I think that is a good introduction for my wrap-up. Luxembourg is a private banking sector that has often confirmed its ability to manage crisis, to serve different types of customers, and I think we are well equipped to serve different types of expectations, and also to adapt quite fast to the challenging times we are tackling today. This is it for us. Thank you very much, and enjoy the rest of the presentations.
Thank you, Jerry. Our next guest is Pascal Rapallino, and he's connecting with us via WebEx. Pascal, welcome.
Thanks, Lynn.
So you're based in Luxembourg, but you're currently connecting from Poland, where you're on a business trip. Yeah. So let me maybe quickly first introduce you. You're EQ's group investment structuring leader, but you're also the president of the Luxembourg Family Office Association. You have more than 2 decades of experience advising corporates and high net worth individuals in their cross-border legal, regulatory and tax matters. Now, I've also heard that you are a seasoned driver in classic car races, so I'm pretty confident that you can take us on a lovely tour through the Luxembourg Family Office landscape. Now,
I will do my best.
Now, let me first start with my first question. Family offices are not new. However, the largest number have been created during the last 10 years. Pascal, can you tell us, when is it usually that families realize that they have to go for a family office model? What is that tipping point or that trigger that makes them move away from the traditional wealth management model to a more individualized one?
Yes, thanks, Lynn. That's a very interesting question, because most of the time when we discuss with wealthy families, that's the number one question. They say, what's the momentum? What's the right momentum to implement a multi-family office, or to work with multi-family offices, or to implement a single family office? That's the key question. And coming back to your point, I would say we have traditional criteria, something like asset under management, type of investment, meaning plain vanilla investment versus a complex real estate or private equity investment. But also we have specific needs coming from the clients, inheritance tax planning. That's the main criteria at the beginning. But for now, we see a new criteria coming from the next gen, something we are going to discuss later today. I think about the next gen, but that's the new component, the new expectation, the new needs of this generation. So just for example, we can say, of course, they are looking for digitalization, they're looking for complex reporting, and of course, a virtual platform. So just to make a long story short, that's a complex question, and just to define the right momentum to move forward and to implement, I would say, a new structure. But the main criteria are still the same, but also a new one with the next gen.
Mm-hmm. And now for our viewers abroad, how is Luxembourg usually part of the process of managing the wealth of these families?
Luxembourg, if I may, is very strange and new because two main components, if we want to summarize Luxembourg. First, as you know, Luxembourg is, I would say, the hub for finance, for investment, for structuring. But because we have the right toolbox in Luxembourg, we have non-regulated, regulated, semi-regulated fund, SPVs. That's why at the end of the day, most of the investment comes through the Luxembourg. That's the main component. But the other one, as you know, 10 years, a bit more than 10 years ago, Luxembourg enacted a law dedicated to family office providers. So now, when you think about Luxembourg, think about, I would say, service providers providing, I would say, family office services. So of course we have the single family office, we have the multi-family office, we have the lawyers dedicated to private clients, some, I would say, family office line at the level of the private banks. Public notary, specific accountants are providing this type of bespoke services for wealthy families. So the ecosystem is very good because we have all the service providers at the same place, but at the same time, we have the right toolbox to design the right strategy. That's why Luxembourg is one of the main locations to provide the right services to wealthy families across the world.
Mm-hmm. Now, can you take us for a second inside the family offices? Family offices are obviously not immune to what's happening in the world. How do they go about these, let's say, more uncertain economic times?
Difficult question, and to be honest, I'm not an asset management specialist. But again, discussing with the main wealthy families in Luxembourg, most of the time they are looking for, of course, investment with a specific return, but at the same time they don't want to put their asset at risk. So looking and discussing with the private bankers, with family office, most of the time would like to invest into private debt. For the time being, I would say private equity, real estate, but direct investment, because they don't want to invest in fund of funds, they just want to direct directly in these private equity and real estate assets. And last but not least, most of the multi-family offices would like to invest in LBOs deal, leveraged buyout deals. But it's quite difficult for a multi-family office or even a single family office to find, to have the right target. Because when you are not an institutional, like a big private equity firm, you don't have access to these LBOs. That's why, again, most of these family offices are looking for this specific type of deals. And right now, to be honest, the biggest multifamily office had some agreement with a key private equity firm, and they are in position to propose co-investment with this private equity firm. And that's a huge improvement in terms of investment, because the co-invest maybe is the future for family office, because they want to be, I would say, to have a strong involvement in this deal.
Now, when we look a little bit more closely at their business models, how do families go about some of the challenges? For example, the changes in regulatory matters, staffing challenges, also digitalization, and maybe most importantly, cybersecurity.
As you know, the past few years, we have been facing a lot of new challenges, as you mentioned. Of course, cybersecurity is one of them, but new tax regulations is a key component for the multifamily office and for investors, for wealthy families, because focusing on tax, for instance, most of the time when you want to invest into a specific investment, you want to have a neutral impact. But with these new tax regulations, it's quite difficult to have these goals. That's why it's key for the multifamily office to have the right tool again to be in line with new regulation. But to make a long story short, two different components. The first one for single family offices, that's very complex, because as you mentioned, new regulatory issues, staffing challenges, but at the end of the day, they are managing their own assets directly via their own entity. So they need to recruit, they need to be in line with the new regulation, they need to be to make sure that they are following the right journey to be in line with the expectation of the family. So it's a very complex process for the single family office. For multifamily office, not the same story at all, as you can imagine, because the wealthy families delegate the management of the asset to a multifamily office. So just to make a long story short, they don't care about this, I would say, new issues, because the multifamily office will have to manage these issues. So it's not the same, I would say, relationship between new requirement between single and multi. That's the definition of what are the family are looking for at the end of the day. Do they want to manage by themselves their wealth, or do they want to delegate to a multifamily office? That's the main decision. Because coming back to your first point, your question was what the right momentum to move forward. But the second question could be, are we going to option A or option B? Option A being single family office, option B is multi-family office. That's another key component to have the right decision before moving forward.
Now, you also mentioned briefly earlier the next generation. We are witnessing one of those biggest intergenerational wealth transfers, as the baby boomers pass on significant wealth to some of the younger lucky ones. Now, inheriting wealth is one thing, but going about the process is another. How do family offices manage that these days?
It's a long and complex journey, as you can imagine, because expectations and needs of the next gen are completely different. Just to maybe to summarize and to cut some expectation from the next gen. ESG, diversity, they want to have an impact when they invest. Lifestyle, digitalization, so a lot of new components. That's why it's very difficult for multi-family office, even for single family office, to be in line with this new, I would say, expectation. But just to give you an example and to tell you a story. 10 years ago, I will not give the name, but private banks and one of the members of the Big Four tried to put in place specific trainings in order to discuss with the next gen, just to understand again their needs, their expectation. And coming back to, I would say, the result of these discussions, these trainings, it's a very, very interesting information. Because based on that, this bank and this Big Four did put in place, I would say, a specific bespoke services, again, to be in line with this new expectation. So I'm quite confident about the understanding of the needs and the expectation of this new generation. That's why, again, we will be as a sector in position to provide the right services with these wealthy families, and the transition between the boomers and the next gen will be quite smooth, my view, because from a technical perspective, we have the right tools in terms of reporting, digitalization, and we have the right structure to have, again, a smooth inheritance tax planning. So the main components: reporting, inheritance planning, and then we will be in position to have this proper transition in the coming, I would say, years, because that's the momentum right now. So I'm quite confident about the multifamily fees business, thanks to the regulator in Luxembourg, because they provided us with the right tools.
Mm. Well, that's a very comforting message to end with. Pascal, thank you very much for having taken the time to connect with us from Poland, and I wish you an excellent continuation of your business trip.
Thanks, Lynn, and have a good day. Thank you. Bye-bye.
Thank you. Now, let's move back to Luxembourg, but more in the digital spheres. I will now give the floor to Alice Danoy, who is the Director of Innovation at KPMG Luxembourg, and she will lead our next panel on wealth management and financial technology. Alice, I hand over to you now. Thank you.
Thank you very much, Lynn. Hi, everyone, and welcome to our digital panel today. I'm Alice Danoy. I'm Head of Innovation at KPMG Luxembourg, and I'm very glad to be here today to discuss and debate with my panelists around digital on the wealth management sector, and to see what is the importance of having fully integrated tools to answer customer needs of today and tomorrow, and as well finding the delicate balance between physical and digital services for those customers. And as mentioned by Lynn earlier, we all know that the context is very complex and uncertain, and this is, of course, shaking the sector, which is no exception of that disruption. And to give you, to share some of the factors, one is obviously economic. I will not list those reasons again, but those are, of course, make the clients less confident in investing. Another factor is the competition is increasing with more and more players entering the market and the red ocean. Another factor is technology. So why we are also here today to discuss. Technology is continuously revolutionizing that market, and we'll have the pleasure to have some more examples today. And a very important one is the customer expectations. So customer wants, those expectations are higher than ever. Customer wants easy onboarding. They want to have easy access to user-friendly apps. They want access to their data 24/7. They want a smooth and seamless experience. And apart from that, and on top of that, customers are more diverse than ever. And they are, as Lynn also mentioned, they are global clients, and they are multi-generational clients. And to give their view and share their insights, I have the pleasure to have with me on stage and online various and amazing panelists, and from banking and fintech world. And I'd like to let them introduce themselves better than I would. So thank you very much, Gaëlle, Haag, for being with us today. May I ask you to give more a bit of info on yourself?
Yeah, thank you very much, Alice, and thank you very much for inviting me. So I'm Gaëlle Haag. I am the founder and CEO of Capitana, and Capitana is women's BFF, best financial friend. So we are an investing platform that focuses on providing women and men. We are very inclusive. No worry, Bertrand, you're more than welcome to join. And providing bespoke, portfolios so that they can achieve their life goals while having an investing strategy that is aligned with their values. That's what Capitana does.
Thank you very much, Gaëlle. And we have the pleasure to also welcome online Adina, who is, can I say that very, very objectively calling us from the most beautiful city in the world, Paris. So Adina, if you may share a couple of words about you.
Sure. Thank you, Alice. Hello, everybody. I'm really glad for being here from this beautiful city of Paris. I am the founder and CEO of Active Asset Allocation. Active Asset Allocation is a financial engineering company. We have an expertise on making risk-based, bespoke investment algorithm for investors. So that ranges from institutional investors all the way to like everybody that wants to make some life savings. And we have developed a huge expertise on the digital side. So we have developed a full-blown cloud-based platform with tools for very sophisticated asset managers, investors, insurance companies, and also selling tools to help the distribution network of financial services better serve their clients.
Thank you so much, Adina. We also have the pleasure to have Bertrand on stage. Thank you for joining us. May I ask you to also share a bit more about yourself?
Sure. Thank you, Alice. It's a real pleasure to be with you today. I'm a more classic resume here. I'm in charge of financial markets and digitalization for Société Générale in Luxembourg, which is one of the longest standing foreign banks in Luxembourg.
Thank you very much, Bertrand. I'm very glad to see so much diversity in experience in this panel. It's really giving us a lot of different insights for our discussion. But before I shoot the first question, I would like to share with our audience that you can drop some of your questions on the chat. If you don't see it, I think you can scroll down a bit and you will see the window where you can share your questions with us, and we'll have the pleasure to answer some of them at the end of the panel. So let's break a bit the rules and start with the first question for a man on the panel, Bertrand. So there is more and more pressure on old school, so-called old school business models. I wanted to ask you how do you see the market and the digital tools as well evolve during the years?
Sure. I believe that all the wealth management clients that we see in banks today are looking for at least one thing, is at least to preserve their wealth and then to maybe pass it on to their families, their loved ones, or sometimes to charities as well. In that sense, I think one of the key elements in the relationships between the banks, maybe sometimes the fintechs as well, and the clients is really trust. And unfortunately, I don't think that we've found a way to digitalize trust yet. That could happen. But nevertheless, I think that digital tools these days offer a way to build trust and to help the clients, and mainly by improving the client experience. As you were mentioning in your introduction, I think that we can make things a lot easier for the clients. We can offer a rapid, reliable, easy access to information, namely on portfolios, on investment strategy, on markets. And that helps the clients also to have a proper experience. But also, we can help them also exchange, consult, and sign documents online these days, which is maybe classic, but it does help also client experience. And finally, on some segments, even I think we can offer more services that are more digitalized, like robo-advisory. And all this, I think, really helps to build the trust and the relationship between the clients. So digitalization, I think, is the key in building trust in the relationship with the clients.
Yeah, definitely. Thank you, Bertrand. Like, we were talking about those digital tools, but we know that also the pandemic has weaknesses, like made weaknesses in banking, like client relationship, a bit more apparent even than before. How do you cope with that to make sure that you keep that balance between, like, as you said, like digital tools and access to those services, but keep on that physical, like, relationship with your clients?
Yeah, of course, the relationship with the banker is key because he's the key of trust. He has probably the best knowledge of what the client requires, needs. He knows himself. I was talking to a consultant on digitalization. He said, in the 60s and the 70s, the banker knew everything about the client. He knew their business, he knew their wealth, he knew their real estate, he knew who their children should marry, basically, even so. I think that we're far from that model these days, and I think that we haven't lost touch with the clients, and the relationship on every level, on every service is key, at the banker level, about the knowledge of the client, but also on the investment side. And that's a constant dialogue with the portfolio manager or the advisor. And the pandemic or anything hasn't stopped that. On the contrary, I think it helped, even boost better tools to have a more frequent dialogue with the clients. I think that in the pandemic, every client used to learn how to use Skype or Teams or another tool, and we're using those with the client. So we keep the relationship really close. So it's not really digitalized yet, I would say, but at least it's getting there, and we are helping them with other tools like exchanging documents, signing documents online. We don't have to see the clients. We don't have to be in front of them anymore.
So it helps strengthening the relationship with the clients in the meantime, and keep on going with that trust with your clients as well. Thank you, Bertrand. So now I'll turn to the fintech side of the force and ask a question to Adina. So Adina, we know each other for 3 years now, as we met in 2019 at the KPMG FinTech Awards, where you were selected as the most promising fintech. And I would like to know today, so what did happen those last 3 years, and how did you manage to keep on that pace and keep on developing a product that fit the market? Can you tell us a bit more about that?
Yeah, it's been a very interesting 3 years. We had this pandemic that changed completely the way people interact with each other, with digital tools. So basically, as Bertrand mentioned, they all know how to use Zoom now. They have become this generation Amazon, where everything is available at the fingertip tomorrow, and that has increased their expectations. They basically are able today to make personalized sneakers online. So they want everything to be about themselves. They want their banker to talk to them in very precise way about how he can help them achieve their financial goals. And but they're also they have learned to search themselves online. So they can go to any bank almost, or any fintech to get what they are looking for. So really today the job of my customers is to really try to stay up to those expectations for the clients. So we've fully used basically the power of cloud, of computational cloud, of AI, in order to enable our customers, who again are asset manager, bankers, insurance companies, and distributors of financial products, to be closer and closer to their clients, and to answer to this need and wish for personalization the investment approach. So typically, to give you just an example, when we started the business, we could only work with very big clients, like 100 million plus, because it took so much time to do this personalization work. And today, we are able to optimize any kind of portfolio, taking into account almost any kind of objective and constraints in a matter of few seconds. So we put all this in line, and it's really the digital at the service of physical agents for today. But we started having customers like Capitana that are B2C providers and that are also looking for tools to better speaking to their clients. And in that case, they might use, for instance, APIs. So they don't want a full-blown platform, but just specific APIs to complete a platform that they already have, and to answer specific things that are very technical and they haven't developed.
Thank you very much, Adina. So the keyword here is personalization, individualization of the solution to fit the customer's needs. I would like now to ask a question to Gaëlle. So in link with what Olga was mentioning earlier in the panel, customers are more various and diverse than ever. And some of them are also looking for simple solutions, things they can understand and where we can maybe educate them, help them understand that better. So what is your product helping on that regard?
Yeah, thank you, Alice, for the question. And yes, indeed, I really appreciated Olga's comment, because it resonates a lot with me. And I'd say even before mentioning customers that are more diverse and are looking for more information, etc., you also, and that's what for me digitalization brings, is you also have a number of potential markets or potential segments that for the moment don't consider themselves as eligible investors, but that actually need investment to unleash the power of their savings, help them maintain their lifestyle, achieve their goals, but also to unlock all those savings, all this capital, to also be able to direct it to, I would say, sustainable investments. And that's what Capitana is about. And then for me, that's where the new technology has enabled to create, I would say, value proposition and services that really target the needs and wants of specific segments. Segments that are today more difficult in a, I would say, traditional environment, just to tap or to put sufficient focus on. I really appreciated what Bertrand said is, in the 70s, the banker knew everything about its customers. What I observed in my past as a, in the private banking industry is that we still have a lot of data. We're just not using them appropriately to serve the customers, to answer their needs, even preempt potentially, their needs. And the second thing is jargon, and that's a killer. People have more and more information online. They can actually find basically everything they would need or want online, but they don't necessarily understand it. And for me, the role of an advisor is not to look, more clever than their customer or more clever than what's online, but rather to be able to explain it in as she said, layman terms, because eventually, and that's what I really focus on, AI, digitalization, API, all of this only has one purpose, is to have a better, service for customers, increase also the number of people who actually make their money work for them, because we live in a society where we live, longer and longer, and the welfare system that we used to know here in Europe is probably no longer sustainable for the generation now and the next generation. So you need to think about, your own wealth much more than you did in the past. And so I think our role as advisors in any trenches of wealth is to provide the necessary tools for them to feel confident, that they can sustain, preserve their wealth over the long term.
So open the door of that market to people like that don't feel legitimate before to to be in that place. Thank you very much, Gaëlle. And talking about like accessibility, like your product, like which is helping also women investing more for their future. I would like to also ask you a question about this very hot topic, ESG, and how do you like also develop that product, so to make sure that you answer that the specific needs of your clients on that regard?
Yeah, for me that's a big challenge that we're facing right now. Is ESG is just an acronym, and it has been developed for more risk-based perspective. But more generally, it's like, especially the segment I'm in. But I think more generally, we talk about the next generation in the previous interview. I think, yeah, indeed, the next generation is probably much more sensitive to the climate challenges, also the social challenges that definitely need solutions and need capital to be able to find viable solutions. But even more than that, I think everybody at some point in time will be confronted with the reality of climate change, whether they like it or not. And so there again, what I observe and what I find a bit sad is that it is very technical. The taxonomy, the different labels, etc. It is difficult for just a man or woman on the street to actually understand what impact means. Whether his or her portfolio is aligned with the values that she or he wants to defend, because again, you have all those challenges, but there's some that might speak to you more, and eventually it's your money, so you get to decide. So the role again of an advisor is to be able to make simplicity, create simplicity in this complex environment, and make sure that the portfolio, the investments that he's advising and that he's managing for you are really, I would say, correcting or addressing at least part of the problem that you care about and you want to help solve through your investments and through the power you have with your money.
Make sure that they're in line with your customers' values. Yeah. Thank you, Gaëlle. And in also that context, I have a question for you, Adina. So how do you offer tool adapted also to the current economic situation, and you make also your platform adapted or to this?
Yeah, and maybe I can just start by completing what Gaëlle was just saying, that this ESG topic is quite complex for the client to understand, of course. And that he needs an advisor to explain to him what's all about and the impacts and everything. But I must stress that it's going to be very difficult for the advisor himself, because there are so many parameters to take into account, from an ESG perspective, but also from a client need and objective perspective, that then the only way of actually managing to do that is through the use of digital tools. So that's one way of answering to the needs and to the situation today, because there's a big push from regulation, as you know, towards the use of ESG. So that's a way of answering to that. And then from an algorithm standpoint, from the investment standpoint, what we do is managing assets based on a risk budget that the client is happy to spend or money to lose, and this is the best position to be in today, because as you can make sure that the client never loses more than what he is ready to lose, and you can keep on reassuring him or her about his investments by putting into perspective what's happening into the market today and the long-term goal he or she might have. So it's it might be scary to see markets going down by even 50%, let's say. But then if you know that this is not going to impact in a very serious way your long-term objective, then you can, it's much easier to sleep at night.
Thank you, Adina. I have a question now for all of you. What does Luxembourg bring to the industry and bring to you as a fintech and as a bank? Who would like to start?
I can
Bertrand.
I can start. I think in Luxembourg, and it's been true for as long as I've been here, which is quite a while. It's a very close-knit ecosystem, and we have easy access to the government, to the legislators, to the regulators, and to other business partners, lawyers, tax experts, and so on. And that really helps to build a real confident and dynamic business community. I think that's probably, to me, the most important things. Then, on top of that, I think that the authorities are putting efforts like Luxembourg and Luxembourg for Finance as well, in bringing up the LAFO, the Luxembourg House for Fintechs, which helps us also, bring more fintechs and more dynamics into this business community. And finally, I think also there was an interesting initiative this week. We started opening the Learning Hub, which is a partnership with École 42 in France, and that helps developers because the marketplace in Luxembourg is not only finance, but there's also large pure digital players like Amazon, like PayPal, which are neighbors these days. So yeah, the business community is very wide. I think that the regulators, the labor people are listening, and they're easily adapting the regulation and the legal framework to new business. For instance, blockchain. There's a pending law on tokenization, which is interesting, and we're helping them also in that way. So yes, it's very dynamic and it's very close-knit, I think.
Thank you, Bertrand. Gaëlle, your view on that?
No, I fully second what Bertrand said. From a B2C perspective, it's a bit, of course, more difficult because the domestic market. You have to find it elsewhere, but still, like being in Luxembourg is also an opportunity because you have much more internationally minded, workforce, resources, expertise than if you would be in any of the other bigger domestic market. So if you want to go international, I think it's a great place because you're already well set and by design open to multiple fiscal regimes, multiple customer behaviors, multiple wrappers. So that helps. It's harder at the beginning, but then at the same time, it also sets you up for success.
So offers that diversity in the end that you can use to scale up. Thank you, Gaëlle. Adina, would you like to share your view with us?
Sure. So it's difficult to say anything else than what Gaëlle and Bertrand just said. Luxembourg is a village where you can meet the whole world. So from a B2B perspective, it's really great because you have everything close by, and being at the Loft, for instance, has been a really door opener for us. They are doing a tremendous job at introducing fintechs with corporates, and this is something that it's hard to find in any other place in the world.
Thank you, Adina. We have 5 minutes left, but I will still like to ask you that question. We were talking about collaboration, like importance of collaboration between banks, financial sector, fintech, over the past years. What is your opinion now? Is it still a reality, or do you think that everybody is taking a bit at its own path and a piece of cake of the market?
Well, I think we can't afford to compete. It's something that costs are important. There's pressure on revenues as well. So competition, I think, is out of the questions. And coming back to the Loft, I think we're organizing in 1 month we're organizing a meeting with fintechs where we're presenting the bank our expertise, and they're presenting their expertise and their business ideas, and we see if we can build new business models. And that's how it works. I don't think that not looking at each other is a major mistake. And I think that technology is helping as well. Adina was mentioning APIs. We can access any services these days with APIs. We just have to have proper data and good UX designers, with ourselves to make the client experience easy. But then we can use services from fintechs, and fintechs are using services from the banks. I mean, we're offering execution services to several fintechs these days, and it's working really well thanks to APIs. So I think collaboration is really going well.
Collaboration is not dead.
Not at all. On the contrary, it's on the rise.
Gaëlle, Adina, would you like to?
You know, like on our side, we're collaborating with a custodian bank, you know, because we are like an investment company, but you know, we only serving a specific part of the value chain. So we also need banks for, and also like you mentioned, trust. I mean, you know, very humble. I mean, we still, fintechs are a bit of a special breed. So it also reassures customers that you do have a custodian bank behind that is reputed, etc. So I fully agree. I think we're serving, you know, we're complementary. You know, we know who knows what the future will hold, but at some point, you're talking about red ocean. You know, consolidation will also happen, and so you need to create those links early on.
Thank you, Adina. Anything like you would like to add?
Sure. Yeah, I think that even the fintechs that started years ago by saying they were competitors of the banks have understood that they can only survive if they actually work with the banks and with the financial institutions. So I really think that that has been a positive change in everybody's minds, understanding that it's all about collaboration and that we will do better together, because banks have the clients, their trust, they know about them, they can reach them easily, and fintechs have the technology. So it's really an interesting match.
So collaboration is still the mantra.
But there's and fintechs can bring something of value, I think. I mean, on top of APIs and everything, but they can teach the more say institutional players how to deal with the data, because there's a big warning about data, and I mean, banks historically have lots of data about clients, but they don't always have the capacity of dealing with it, and I think it's a big warning there.
To collaborate and leverage on each other to serve the market at best. Thank you so much. I would like to finish with the last question, so which is quite broad. What, according to you, will the future look like? What are the big trends you see coming? And how do you already get prepared to them? Adina, would you like to start?
Sure. I think that as far as financial products are concerned, we've lived in a world where the financial products were sold to the clients. And I think that's pretty much over, because clients, again, want solutions for their own needs. And all this digitalization actually brings the power back to the consumer and allows them to ask for solutions.
Thank you, Adina. So customer centricity, customer first. Gaëlle, Bertrand?
On top of what Adina said, is a question of transparency and availability of data, especially everything which is related to the impact. You know, the social impact and the environmental impact that a company has, being able to accurately measure, accurately report, and build then solutions that meet, you know, the needs of the customers, and also again measure the impact of the investor while investing in those companies. There's like still so much to do there, and I generally believe that it's going to be still a very important topic in the years to come.
Thank you, Gaëlle.
Totally agree.
What will the future look like?
Totally agree. I think that's the next trend is really there. It's about personalization. It's about using the data properly, cleaning up our data, and then offering proper services to the clients according to their needs, and preempting them, you know, anticipating what the client's need is something that we need to do. Then the other subjects on which we're working is probably on the blockchain as well, and mostly on the tokenization of assets, but that's something that's going to come in a few years. And finally, I think we're working also on quantum computing, and that's probably a subject for the next 10 years, but it's something that we start working on, and it's really interesting and amazing, and we're really excited. And then I think there is still a case for banks as data custodians, because, you know, we have the trust of the clients, but we haven't seen anything going that way yet. So maybe in the near future. someone will come up with that.
Thank you so much. So as a conclusion, I hope you will agree with me that the main insights I've heard here are like continuously adopting a technology development strategy to make sure you're meeting the client's needs at all time, and like as you mentioned also, Gaëlle, like make sure that you gather data and report the right things that the clients are also expecting from you. And very important point I heard is to adapt to customers' expectations always in terms of personalization, individualization of the service, ESG topics, ethics, and keeping the trust. We also discussed about the importance of technology and how the industry should also use and the data and the power of data to still like understand always better the customers and offer like tailored like products for them, as well as like performing services. And all of this while always retaining the close personal relationship and trust with the clients. So those are big challenges, but I'm confident to see that we have also very motivated and great people to solve them. So now I think it's the time
one question,
for one question,
yes,
because we are running a bit.
The following came in. How do you see crypto and virtual assets being integrated into wealth management portfolios? When will the first private bank open a branch in the metaverse?
A topic that I like. Who would like to jump on this one?
Well, I know that we have planned at Société Générale to open a branch in the metaverse, but it's more a retail thing. I know that some other banks are doing it to offer especially crypto services. For the moment, we're staying away from cryptocurrencies as such because there is no regulatory framework around them yet. So it's something that we're waiting for and that we're working on. But on the tokenization of assets, as I said, we are very dynamic and we're offering tokenization of bonds. For instance, we issued a bond for the EIB. So that is something that we're working on, but not really the cryptocurrencies as such. Yeah.
For me, so when it comes to cryptos, so we do have a lot of education about cryptos. We do workshops, etc. And what we always say is we look at it from a pure regulatory perspective. It's indeed difficult as a regulated entity to start integrating that into your own portfolios. So the approach we've taken is rather inform, demystify, and then give advice about like, okay, depending on your risk profile, this is basically the allocation that cryptocurrencies could have into your portfolios. But it's still like very much a do-it-yourself type of approach when it comes to selecting which cryptos, which token, etc. that you want to invest in. But I really hope, that we will be able to include that in the future. Voilà.
So it's a great start of an exciting journey on that. Adina, anything you would like to add?
Yeah, sure. We have clients who ask us to start looking at this kind of investments. And I must say we still haven't gotten our head around because they are quite unpredictable in terms of behavior, but potentially decorrelated with regards to the other asset classes. So definitely in the years to come, we'll have more and more data and will be more and more ready to integrate them into the portfolio. But yes, regulation is still a bit of an obstacle, and also the lack of sufficient data to look at their behavior.
Thank you very much, Adina. So I would like to sincerely thank the three of you for this insightful discussion. Thank you, Gaëlle. Thank you, Bertrand. Thank you, Adina. That was really interesting. Thank you to the audience for listening to us today. And now I'll leave the floor to Lynn. Have a good time.
And I'm now joined by Christian Gibot. Christian, a warm welcome to our studio.
Thank you, Lynn. I'm very glad to be here today.
I'm going to quickly introduce you. So you are the CEO of the life insurance company Cardif Luxembourg, but you're also now the new chair of ACCA, the Luxembourg Association for Insurance and Reinsurance. Now, I'm pretty confident that you bring a wealth of experience to this new role as chair of ACCA. Can you maybe start by giving us some of the priorities you will focus on this year?
You're right. I took my position a few months ago, and it's the first time a life insurer player comes chairman as ACCA. So it's a change. I will bring my experience, but in fact the priorities will not change because they are defined by the board of directors. So I think three priorities. As you know, the insurance industry is facing a digital transformation, and the first one, our first priority is to succeed this transformation. And to do that, I think we must, we consider we should make the professional secrecy evolve, because by now we are limited to limited numbers of providers, and it slows down our digitalization. Moreover, in the context of cross-border activities, we are facing more and more regularly conflict of laws. Basically, it means that we are not able to transmit information to foreign authority because of the professional secrecy. So this is the first priority. The second priority is cost and regulations. Regulation, there are a lot of new regulation coming from the European Union. There are a lot of review of existing regulations, and these go in the right direction, but we must be careful to the cost of implementation of these regulations, because we are, in Luxembourg, small and medium-sized company. Moreover, inflation is rising, and it impacts our cost. In the context of cross-border activities, almost 90% of the premiums collected in life insurance comes from abroad. It's important for us to remain competitive with the local player in the market on which we operate. And lastly, the priority, maybe it's the most important, it's talent war. Because in fact, all this kind of transformation can be made only with people, with the right people. So we need to attract people, we need to train them, to retain them, because if we fail attracting the right people to do our transformation, it will be probably the main reason of our failure.
Very interesting. Now, for the viewers from abroad that are also connecting to this live stream, can you give a little bit more insight on the life insurance sector in Luxembourg and Luxembourg as a hub for life insurance, and what is currently driving the demand or the key growth factors?
In fact, 2021 was a fantastic year on every market. The total premium collected reached a record for international life insurance. We reached 25.6 billion euros, so it's a big increase in compared to 2020, around plus 34%. It was not the best year. And if we take the reference of 2019, it's plus 10%. So the volumes are here, and the percentage of unit linked in the total premium collected is very high. It increased years after years, and we are happy with that because our products in Luxembourg are designed to this kind of assets, and we are happy that the percentage of unit link is rising in the premiums. The main market remains the same. France, it's almost half of the premiums collected, around 11.7 billion euros, and the second largest market is Italy. All the market went well in 2021. And I think the key factor of success remains the same, because our products are designed for an efficient wealth planning, and moreover, we offer the possibility for our clients to invest in a wide range of assets, and in a low-rate environment it was value added of our product. And in the context of economic uncertainty, as we are facing now, I think this difference, this ability to invest in a wide range of assets remain a competitive advantage.
I would like to continue a little bit on that last point, because we also discussed it in the other panels today. It's the current more challenging economic environment. How are life insurers dealing with these circumstances?
Sure. But despite the context of uncertainty, we are not seeing drastic changes in our clients' behavior. If we are looking at premiums, the trends of 2021 remain the same. If we are looking at percentage of unit link, it remains the same. So what is changing is probably an higher demand for private assets, a careful look on the bond portfolios, and I think it's too early to say what would be the consequences of the COVID-19 policy led by China, for instance, or the war in Ukraine. What would be the consequences on companies' results, and what would be the consequences, in fact, on the asset allocation? So I think it's too early to say. We see a period of uncertainty. It's a period of opportunities, in fact. And for the time being, we are able to offer everything, every kind of assets our client needs.
Mm-hmm. Now, another point that is very high on the agenda is ESG. Now, life insurance products take by nature a long-term approach. So this also means that ESG will become more and more embedded into the products. How are you currently managing actually that shift?
ESG is an important topic, generally, and for the insurer as well, because we have a long-term view. And at ACA, when I discuss with my colleague CEO from non-life insurance companies, or even worse, reinsurers, they are directly, they see what are the consequences of climate change directly on their P&L. So we see that, we want to make the move, and to do that, we are careful when we invest our own assets, and we measure the impact on CO2 emissions, temperature, etc. So we have a proactive approach on it, but it's only for our own assets. For unit links, it's a bit different because we rely on asset managers, and what we see is that the ESG is now a topic which is discussed with a private banker, and ESG profile is taken into account when defining the risk profile of the clients. So we see a change in our the asset allocation of the clients, and I think the coming regulation, I mean SFDR, will go a step further. Because every fund will be scored. I'm sure you discussed that this morning, but there remain a lot of technical issues to deal with, but I think it's a step which goes in the right direction, because we will add more transparency, more disclosure on our investment, and it will help us to accompany the climate transition.
Mm-hmm. Now, you mentioned also the private bankers. One of the advantages that is often mentioned about life insurance companies in Luxembourg is that they can work very closely together within the financial hub with the private bankers, with the private equity specialists, with the custodian banks, etc., etc. Can you go a little bit more in detail on how this collaboration works?
Sure. In fact, when we are in fact, usually we start from blank page, and we start from blank page, and we try to design the solution which fulfills the needs of the clients. So for doing that, to do that, we have the opportunity to benefit from the Luxembourgish ecosystem and beyond. Private bankers, you told it, custodian banks, and asset managers. So, life insurance contract is kind of a cooking recipe. It's kind of cooking recipe with a lot of legal and financial expertise, and we are connected to many players, and we put together a custodian bank, some of asset managers, to design the contract which will fulfill the client needs on a wealth planning perspective, and which can allow the client to invest his money in the asset allocation he has decided. So this is the major difference when we compare our contract with the contract offered by local competitors in the market on which we operate, because in fact we design a tailor-made solution thanks to the Luxembourgish ecosystem.
I love your comments about the recipes, and thank you for giving us the insights, not only in the life insurance sector, but also into the kitchen. Thank you very much for having taken the time to join us today, and I wish you the very best with your new role.
Thank you very much.
And that brings us already to the end of this live stream. Each entrepreneur, investor, or family has their own unique history and experience with how the world works. And that's why their views on how their wealth should be managed are unique as well. As discussed by Christian and all the other speakers, the quality and the strength of wealth managers today lies in the way they can work together in a financial services hub such as Luxembourg to serve their international clients and also build the foundations for the next generations. I would like to thank you, the audience, for having connected with us today. I would also like to thank our speakers and sponsors. In case you would like any additional information, you can always contact our business development team or check out our website, where you will also find publications and articles on international wealth management. You can also keep an eye on our events calendar, because we will be back soon with other topics. Until then, I wish you a lovely week ahead. Thank you and goodbye.